Today in the grain market, soybeans did fall. That higher start ended with a big reversal today, a 53-cent drop from the high, which was kind of a surprise, even with the soybean oil making a new all-time high. There's just a lot of irons in the fire. I think that's why the market is a little bit disruptive here on this Friday. But the cash crush margins were up $3. But I think very possibly it's the overbought condition at the end of the week that really, sent the market a lot lower. And all the grains didn't go lower, so that's something to write home about. We did, there has been some profit taking with some speculators that really pushed it a little bit lower. Today is also May option expiration, which was kind of interesting because the highest open interest for May was $17. So of course the market was just going to hang right around here. But in July, $18 has 10,000, and even $19 has almost 10,000. So that's something to be watching as we go forward. Now the futures did end 44 cents lower at one point, and this is like a real correction, and perhaps this is what was going to be happening in this market anyway. Now the CVOL for soybeans is 23.3%, the soybean oil is 32.8, and the meal is 25.8. Now today corn was lower as well. That lower export sales number really put a little bit of a lid on the market rallying. Even though the world corn crop was kind of cut a little bit, that market also is a little bit overbought. So we expected, some kind of a pullback. The option open interest in July $8.50 and $9 is really high. So the idea that going forward, the market could be pulling it a little bit higher. Maybe that's why we didn't go as low. But right now, we're solidly above that $8 mark, and I think that it just shows that there's plenty of support underneath. The CVOL is at 30.8%, and in the end, the futures were slightly up. Now wheat today was steady. There was some profit taking that sent the futures a little bit lower. But 15 cents as a range is literally like a standstill for the wheat market as of late. Export sales were not great, but traders just were not willing to really liquidate all their longs to push that market a little bit lower. I think that might be saying something. There's still so much going on in Russia and Ukraine about, how much grain is coming out, how much can they plant. That's going to be at issue for as long as this conflict remains. So that's something that we're going to have to just watch going forward. On top of that, the U.S. weather is not the greatest right now. So even in the north, it's a little bit wet. Southern plains is dry and windy. There's just a lot of things that are going on. Right now, the CVOL is at 42.2% for wheat. And I think that the weather is really going to be front and center come next week in the grain market.